Good afternoon and welcome to the daily wrap-up via ForexAnalytix. And we're seeing another relatively quiet market here. The dollar index has stayed on the lower end here. And one of the things that we talked about earlier today, and I mentioned in the room also, was this is very similar to the same move we saw here. Remember this? Look at that. Very similar moves. My thought going into the week, I mean, I've been bearish the dollar and really more towards from the fundamental standpoint, which because I was expecting, a rate cut to go on and transpire in light of the continued weakening data that we've had. With the exception of retail sales, all the data has been weak. Don't tell me anything different because it hasn't been different. Okay. Henceforth, why the dollar had gotten pummeled like this, okay? But that being said, we saw another big move from the dollar back here, and the market had dropped quite aggressively. And I remember coming in, I mentioned it before, stating, hey, look, here's our resistance. We had it initially was 96.91. I remember that very well at the time, and it actually hit that in the European session, actually moved a little bit higher at the time. Later on in the year, day session by, I guess, a few pips or something. I don't remember. Actually, it might have been where we popped up before then, but we had actually had a tough time trying to get beyond that. And you can see we couldn't even get to 97. And then finally on Thursday, we get above 97. We go have it, but we don't do anything with it. And then Friday, man, they rolled over the shorts like nobody's business, okay? And we're seeing pretty much the same thing. And my thought was that we'll probably be bid going into the G20, but we haven't so far. Well, it's the same thing here. There was, coming in place. Here was Monday, Tuesday, Wednesday, Thursday, and then Friday took off like a banshee. So are we going to see the same thing? Well, I was expecting the dollar to be bid, and we still may see that. I mean, the euro is just kind of just bouncing around in a very, very tight range. And as I mentioned some people to today is, traders are creatures of habit. So they're going to remember what happened this last time here. After a big fall, market didn't do anything. And then Friday we took off like gangbusters. And the same thing, another big fall, nothing happens. We're sitting here and we may see the same thing. Even if we don't see it, the market thinks that. But here's the bigger concern overall is that at the time when we came to 96.50, that was a pretty big key level at the time, okay? And I remember we were looking for that move at the time for it to go, and I think it went down to like 46 or 47, something like that. And we saw the market go and come back. Well, the same thing here. We were looking for this move to 95.90 to go and hold. Confluence with the 23%. We've talked about that on the way back, and we're just not seeing much of a jump here. We'll have to see what plays out tomorrow. Now, our medium-term target we're looking for is this 95.65, which confluences with 161% of this move here, okay, extension. But one of the big concerns we do have is that we have broken below the trend line for a second time, and most do expect to be a rate cut coming next month. They're not necessarily expecting a 50 basis point cut, and Bullard was one that let the air out of the balloon at the time. I thought the euro might pop up above 114, but he came in a couple of days ago and said no 50 basis point cut, and then we saw the dollar pop up, the euro come back down, but we stayed in a relatively tight range. And my concern, I've brought this up multiple times, same way that I brought it up multiple times when I was kept saying the data looks terrible, the dollar's going to have to come back, is that generally when the Fed's going to go in and cut, and I compare this to the same situation or comparison to 2001 when the Fed did go in and cut, they didn't cut just once, they cut more, and the market eventually fell. And I've stressed that before, the market fell from 118 all the way to 108 in the preceding 8 weeks to the cut. So my thinking is that the market, I just saw something come across the wires on Live Squawk from Daily, and he was saying, hey, we're going to be looking at the data. We're going to see, is this transitional data, or is it weaker, something that's really going to grab hold? And the thought process is, as the data comes in weaker, it's going to foster that thinking that this is something that's becoming more prevalent, that it's going to be something that will go further. So even if they only did 25 basis points, I don't think the market believes they're going to stop there. And we'll see another 25 basis points and probably another one after that, potentially. But the thing is, once the ball gets rolling, the ball gets rolling. And no one expects the Fed to say, okay, 25 basis point cut, and that's it, no more. I don't believe that's going to happen. I don't believe the market's going to think that's going to happen. And that's my concern, that this dollar could really slip. So you have to be very careful with that. As much as I think the dollar will go bid, and my thought was it'll go bid into the G20. Although Larry Kudlow was already stating they're willing to go on and put on more tariffs if things don't work out with China. I think that Blake pointed out that the meeting with Trump and Xi Jinping is only like an hour and a half. So how much are they going to go and get to resolve in that shorter time? So probably not, but we shall see. My thinking would be they'll come out and say, well, we're going to do more time to get this resolved. And I think people in time will say, you know what, nothing's really happening, and the data is just going to continue to get worse, which would suggest, which would more than likely solidify the cut for not only next month, but looking for further cuts. Henceforth, that would really weaken the dollar. So you have to be careful. My thought being is, when we pop back up, as I mentioned, traders are creatures of habit. They remember what happened here, and the market just ran over the bears. Well, my thinking is that even if we do get that on Friday, it's not going to be this kind of move that's here and we add further. My thinking is that the market will say, you know what, I'll take the other side. So even if we do get that rally, I don't think it's going to be the same kind of rally, nor do I believe it's going to sustain. Matter of fact, I'm going to be selling into that, and I never hold stuff over the weekend, but I'll be glad to go and hold and sell the dollar, over the weekend, and i.e. buying the euro. So that's my take on that. It's a very quiet session, so we're not going to spend a lot of time because obviously everything's stayed relatively quiet. Now we are looking at the dollar CAD. We'll get to that. Let's go on and we've got too many keyboards on the desk. Hang on. So we made it to that 31. I thought we'd get a pause here at 31.36 in the bounce, and we haven't. Now, we had a buy chart support yesterday at 31.26. I got long at 31.27, added some more at 15, got out of my ones at 15, but I probably should have gotten out here, but we're pressing, but we have reached that target. If you look here, here's our basic technical analysis for the week that we do over the weekend. Period would need 2 consecutive closes above 32.95. Next target is 31 even. There it is. So we hit the 31, okay? I'm looking potentially, if we do get that bounce from the dollar, for us to go on and pop back up, but we have gone and tumbled all the way down here. It's a little bit stretched. Could we go a little bit further? Yes. The little bit further would actually take us to 30.80. Definitely don't want to go and see that. I'm a scalper, so probably shouldn't even hung on, but I feel okay with this considering how far it had fallen. So we'll see how it plays itself out. I was looking for a move back to 30.48, but we're also looking for 30.83. But right now, it's holding the 31 even. Let's see how things work out going forward. We shall see. The dollar yen has come back, but we've kind of paired back here. You can see that here. Other than that, and the cable sliding back, no real news. The only thing I will focus in on is on the euro here. We're looking at a 30-minute, but actually I was even looking at it on a 15-minute because there just has not been any movement. But you can see here that the market is I don't want to say trapped, but it's within these levels. And this is a level I was looking at, because I noticed that over the last couple of days, we keep doing the same thing. We break lower, then we don't follow through, we jump up, we do a fake, and then we come right back down. And it's just kind of like up and down. And I think that's the same thing we shall see. Now, with the cash dollar index, it did make a run up here, took out the 96.34, but we've rolled back down again. We're once again looking at it on the 30-minute. We're going to see what happens. My thinking is we can get that bid. It may not happen. It may not come to fruition. But if we get that bid, we can pop up. But my thought being is that it's not going to go on and hold, that there will be willing sellers into this. Here's our bias chart resistance we're looking at from yesterday and still in place today, which is going to be 96.56. If we do get that that pop, then I think that there will be willing sellers. Same thing here with the euro. We kept our bias chart resistance and support the same from the day before, which is 13.24, 13.96. I'll be happy to go and buy down there. Once again, like I said, I like to kind of bounce around, take the other side, but I just do not want to sell the euro. I don't feel comfortable selling the euro. Another thing is that just like you pop up here, if the euro gets short the euro and we pop up and let's say we take out the highs by 5 pips or even higher, it looks like it's starting to run away, I got to get out, only to probably see the euro turn around and fall right back in line again. So I'm only going to play the euro from the long side. There have been some opportunities even from yesterday here, but I do not feel comfortable selling this market because if we do get taken off, you just can't get in the way of this market. Once it gets going, it could get going. And my concern, as I told you, not that I'm expecting the same thing, but we had the same situation ahead of 2001 where the dollar index was also near upper high levels. Same thing that's played out here where we saw the dollar, like I said, preceding the cut fall 1,000 ticks. I don't think the market's going to fall 1,000 ticks. I don't even think it's going to even fall half of that or maybe even 1/3 of that. But that being said, this dollar could get some momentum. And I think that with each piece of economic data that comes out going forward, the Fed governor's already saying there's going to be more scrutiny on that. And it's just, and if the data continues to come in weaker, it's just going to go on and embolden that thought process that this is really taking a hold and that they're going to have to cut. And so if the data comes in too much weaker, then the market might flip back and start saying, you know what, they may have to do 50 basis point. Maybe they'll try and do 50 and say that's all we need or something. And we can start moving lower. And my concern also is that we're just simply not holding this area here. I mean, we're holding it, but I would have liked to seen a better bounce off of this. We may still get that. I'm thinking we're going to go bid into the G20. But once again, it's not the type of price action that you would expect to see from a market you're thinking it's going to bounce back. And that's my concern, is that we could really start to go and slide if the market believes the Fed will have to cut. And it's not so much that the market believes the Fed will have to cut, is that the idea that the Fed never cuts once, one and done. It's a series that goes beyond that. Now, would it be 225 basis point cuts and that's it? Or if the data really grabs hold and continues weaker, then does the market flip back to the thought process of 50 basis points and possibly done? But then once we get to 50 basis point, then the market says, well, you know what? Maybe we'll have to do another 25 in the fall. So once again, that could open the door for us to move much weaker. And you can see here, it's not like as if we're here with the dollar. We've been way up here in the stratosphere. We're not even that far away from this upper area here. You see, so we could really start to go on and slide back and potentially get a meaningful move that could potentially, if we start to break here, the market now is going to start targeting this 93.50. And that's what I'm saying. You just don't want to be in the way of this thing if this thing starts to go and slide. We take out that 95.65 and it's going to be 93.50 as the next potential target to go to. We'll go on and just quickly move into the cross rates before we finish up. Like I said, it's a very, very quiet session. Obviously, be remiss if we didn't mention Bitcoin. Bitcoin has really gotten, thrashed pretty good. Gold, and I'm looking at it via the XAU. I'm still looking for potentially a move down here to 1390s. 1390 in the XAU, which would translate to about 1394, 1395 in the August gold futures. I'm still looking for that move here. We already went over that, spoke about that yesterday. We talked about the price action. We can just move it real quick. I'll just touch on it. I'm not going to spend a lot of time on that because we explained ad nauseum yesterday in regards to that. And the idea of as the market breaks lower, people are quick to pick it up. Oh my God, what a buy. And we, like I said, we drop off $20. I mean, my target was 38 and we got up to 39.20 and we dropped off $19. The market comes right back. Man, what a fantastic buy. It's a buying opportunity. You see it again, we come back down. Man, look at this. This thing runs right back up. Another big buying opportunity, $15. But as the market starts to break, then people are saying, well, wait, how many opportunities do I get to buy these great buying opportunities? Maybe there's something wrong with this market. And then those that are hanging on saying, well, I'm not going to take a few dollars. I know we're going to 1,500 real quick. And then the market just hangs around, and then we have to drop lower. And my thinking is, here's my 1390 you see here coming across. And that's where I'm just going with the levels, folks. That's it, just the touches. And that's why I think we can make it down to 1390, which would flush anyone out that's long from the 1420s, maybe the 14 teens. flush them out. We come down here. Doesn't mean it's going to stop right there, but that is the area where it's going to be able to hold the market. You can see even if we drop another $9, okay, so what? You know, now we're way off the top. And now after this area of I don't know if we call it consolidation, then we break lower. Then people can say, okay, now I think we flushed out some good people and some traders, and now we can move higher. That being said, on the 30-minute, we have generated a buy signal here. We'll see what happens. I mean, but I like it below 1390. We'll see. Aussie Yen has continued to move higher, but we have come in close to our bias chart resistance here. You see that just above the 23%. Once again, like I said, very, very quiet market. We know that the Aussie dollar is taken off, and we'll also go back to the Kiwi. You can see the Euro Aussie is also paired back into some support, and also looking here at the Euro Kiwi. Boy, we've really come off. Yesterday we had 69.95 as our buy chart support, and that held. And I think we may have kept it there, but look, we've continued to slide here as the Kiwi has strengthened. Sterling odd has fallen back into a very key support level right here. There at the 80.90. I think we have a list of the 80.98 here. But I want to go on and quickly move into to look at the Aussie and the Kiwi. So let's get to that. Don't want to miss those. Okay, here we are with the Kiwi. Someone was asking me about that earlier today, and we have our bias chart resistance, which is 6709. If you're with us here with ForexAnalytix, I mean, we were covering this when they did the RBNZ the other evening, and you can see here where we dropped back real quickly. And the thinking was, hey, look, if they don't cut, if they hold, they can make a move to 67 cents. Well, 6709 is our level. You can see where we're coming across here. You can see all the touches coming across here with the 6709. Let me pull this back so you can see it further back. There you go. You see that? All the way back here. So I like the 6709. They're looking for 67 cents. Look, the comments coming out, and we were posting them in the room, I was posting them there, were really very dovish. So I think that they're opening the door where they will cut on the next meeting. But right now, we're just stretching it as far as we can. I like the 6709. Moving into the Aussie, and we'll finish up with that. Okay, I've got 7013 as our bias chart resistance. 7018 or 7019 is a 50%. The big level here is at 7027. I'll show it to you here on the daily, and then we'll skedaddle. Hang on one moment. So here's that 7027. It's been in place for a long time, basically since Moses crossed the desert. And you can see that here. We'll pull it in further back for you. Just huge, 7027. Big level on the way down. You can even see how many times they kind of danced around. But I don't even think they'll even make it to the 7027. I've got 7013. There's our bias chart resistance right there. 7013. Pull this right up here. There it is, 7013, 6709 in the Kiwi. And we'll see. I think it could use a pause after a very nice run. The Kiwi's a little bit different, where I think that we're looking for a cut going forward. They're really speaking rather dovish. I'm kind of surprised that the Kiwis continue to move higher, but most people are looking for at least 67 cents. That makes sense. So knock it off at 67. We have our bias chart resistance at 6709. Anyway, that being said, that's what we have. It is a very quiet day. Kind of looking for here that potentially we can get that bump up here in the cash dollar index. Maybe we see it go bid into the G20. That's what has been my thinking. And then that will pull the euro down. Areas of support for the euro are going to be, at this point now, we're looking at 1324. There is some at 1336. It never did make it quite down there. We'd stopped at, what was it, like 1345. And then last night, I think Blake mentioned it may have stopped around 1348, right down here. But I think down there in the 20s is going to be an excellent area. And I would not be surprised if the dollar index did rally and turn around and quickly lost it all within the same day. Maybe got all of it but set itself up for a weakening. But we shall see. But thanks for joining us here on the daily FX wrap up.